Sovos Brands showed up strong in Q1, beating earnings estimates and updating its guidance for the year ahead. Shares of Sovos Brands outperformed the S&P 500 so far in 2023, even as inflationary pressures weigh on shoppers. Joining us now, we've got Todd Lachman, who is the Sovos Brands founder and CEO. Todd, great to have you here with us this morning. First and foremost, walk us through the quarter, the catalysts that you're seeing in this relationship among consumers and some of their preferences.
Great. Good morning. Great to be on the show this morning. So, first and foremost, couldn't be more thrilled with the results for the first quarter. Growth 27%, volume led, highly differentiated versus our peers. Volume up 16%, price up 11%. So we're seeing nice price flow through. So pricing and productivity helped obviously more than offset inflation, with EBITDA up 30% year on year. And those results are Q1 results plus the momentum really coming out of last year through this year. We took our guidance up meaningfully for the year, and now at midpoint, projecting around 16%, 15% top line growth, 16% bottom line growth. And really the driver of the momentum of the business is our cornerstone brand, Rao's. So the Rao's brand grew 38% in the quarter. LTM, that brand now is over $600 million in net sales. So the Rao's brand, 618 LTM, up 40% year on year, driven first and foremost by sauce. And we saw sauce household penetration in the quarter increase, the largest quarterly increase we've ever experienced on the brand in the last 3 years. And again, this brand is developed, though still the penetration level of 13% is well below several of our peers, which is above 30%. So we see still a lot of runway on the Rao's brand, and our non-sauce businesses, which now comprises 20% of the Rao's franchise. And that would be soup, that would be dry pasta, that would be frozen entrees. We just launched pizza. Happy to talk about that in a second. That combined non-sauce business grew 46% in the quarter. So really pleased about the momentum, and that led to taking up guidance as well for the full year.
Hey, Todd, when we're looking, whether it's Rao's or Noosa or Michelangelo's and the new products here, none of them, as you're talking about, are that penetrated right now, to your point. How much of the sales gain that we saw in the quarter was increased distribution versus sales of existing? In other words, in the like-for-like stores, the places where you guys have been, how are sales doing there?
Phenomenally well. So that's a great question. What we're seeing is honestly like the consumption level that we grew was, really 38% net sales, high 20s from a consumption basis. So we're seeing very strong velocity consumption growth and like for like. Our penetration is 13%, but that's really households. From a distribution standpoint, we've been approaching 90% ACV distribution on this brand really as of 2 years ago. So from a distribution standpoint, the brand is well penetrated in stores. The opportunity is to be well penetrated in households. So the like for like sort of growth has been very, very strong. It's actually comparable with our consumption growth, though we did gain even more distribution during the quarter, up 22% year on year. And our awareness, as I talked about on the last quarterly call, went up, of the Rao's brand went from 48% to 58%. But still, there's 5 or 6 sauce brands that have awareness above 90%. And that's what we really like to highlight. Even though our growth is as robust as it is now, we're projecting significant growth in the future because our unit share is only 7%, because of our price point. Our penetration 13% versus 30%, awareness 58% versus 90%, and our average number of items is 14 versus 20, greater than 20 for several of our peers.
Todd, you'll have to forgive me because living in New York has kind of taken me out of the frozen pizza or ready-to-make pizza market for a little bit. Yeah. We got some good options up here. But what kind of margins do you look for on announcing or launching or entering into the pizza market, as you were just alluding to a moment ago?
Sure. So the frozen pizza market is a large market. It's roughly $7 billion in size. And we target at least a 2 share in all the categories that we enter. For example, we're a 2 share, a little bit over a 2 share in soup now, approaching a 2 share in dry pasta. So the margin structure that we target for any of these new categories is to be comparable with the Sovos brand average. So although we have super premium products with high quality ingredients, so our sauce, for example, you've got whole tomatoes, slow simmered with olive oil, garlic, real ingredients versus paste, water, sugar, canola oil for mainstream players. We look for the same thing in pizza. It's a wood-fired crust, Rao's sauce, very high-quality premium ingredients on the pizza. But we basically look for the pricing and the margin structure of those products to be comparable with with the Sovos average, so that they're equal to margin or potentially margin accretive when we launch them versus margin dilutive. And we are very, very excited for that frozen pizza launch. I've been public around, we tested that business. We were in 4 retailers for about 7 months, fine tuning it until we launch nationally. And that'll be rolling out all throughout this year. And we've got really high expectations for that pizza launch, which is the 5th category now that we've entered into post our acquisition of the Sovos sauce brand in 2017.
That's a lot of taste testing. I'd like to get in on the 5th or 6th month of that taste testing. Todd, thanks so much for taking the time here with us. We got to check back in on you, and we'll continue to keep an eye on the stock movement here. Todd Lachman, who is the founder and CEO of Sovos Brands. Appreciate it.